Bingo, bango, bongo. Man, things are popping. Big changes in the market this week. I really can't wait to detail it to you. But first, we need to detail this disclaimer. Very, very important. All right, let's take a look. First of all, let's take a look at the S&P. This is actually not the most bullish thing out there, but it's not bad. First of all, we've had what I've been calling the creepy, uppy bull market. It just creeps up. We had lots of momentum at the very beginning back in late December, but now we're just creeping up. But now we've gone beyond what any normal retracement would do. Now, we haven't surmounted any significant highs up around 2,800, but nonetheless, the fact that we're this high means that the bear market is over. One cautionary thing is the purple predictor is not bullish here in the S&P. What about the Dow? Well, bingo, bango, bongo, look at in the upper right-hand corner. You can see that the green line has crossed the red line for the first time in 6 weeks. In other words, there's more buying pressure in the market now than there is selling pressure. This is a significant change, significant bullish change. What about the NASDAQ? Also doing the creepy uppy thing, but look at the purple predictor here. As I told you last week and the week before, January is when the NASDAQ outperforms. Small caps outperform. Value stocks outperform, and that's exactly what's taking place right now. Seasonality, still neutral. I really think we have to get up above about 159 before I'm going to switch it back to bullish. So in the meantime, it's doing that creepy uppy thing. Seasonality should just be bullish all the way to July, no matter what scenario you pick. Now, this is significant. You know I've been focusing on this, and you can see that the danger zone, we're drawing back from it. So we got down to about a 15 basis point yield curve, which to me is a red flashing light. Now we're pushing 40, which is kind of back to yellow. So this is something that I think is really, really supportive of the market right now. Very important price action here. Asset allocation. They're selling bonds and buying stocks, so we're seeing new money come into the stock market. Another bullish feature. Is a pattern starting to develop here? I think so. What about the Risticator? Well, this week it didn't do much, but that follows a week where it was up dramatically. And remember what this is saying is, do people want to be in risky assets like technology, or do they want to be in unrisky stocks like utilities? They don't want to be in safe havens anymore. They're trying to go for the gusto here and make money by buying stocks that they think are going to go up. They're not trying to hunker down anymore. They're trying to, can you hunker up? Okay. Global shares just following the U.S. along, so really don't care. Okay. Bonds. This is where a lot of the money is coming from to get into the stock market, and that's the bond market. Now, we've been telling you for some time now, for months, to be long bonds. I don't want to be long bonds anymore. That's it. I'm out of bonds. I think interest rates are going to go higher now. Let's take a look at our bond key factors. Holy moly, all of them are going up. 100% unanimity that interest rates are going to go higher now. Now, our indicators, have a tremendous track record. We look at reality, whereas other newsletters look at some type of fantasy land. But let's take a look at the 3 indicators. First of all, at the top, that's interest rates. And you can see it's already started to come up. Let's take a look. The chart itself is CRB. That's commodity prices. That's a leading indicator of interest rates, and they popped up strong. Then we see the yellow line. That's gold. It turned up several months ago, it bottomed out in August, but it accelerated recently. And then finally, and perhaps most importantly, is the blue line, which are 10-year treasuries in Germany. And it's popped up as well. So bingo, bango, bongo, interest rates are going higher. Now, you may say, well, that's bearish for the stock market. No. Why? Because it makes the yield curve more positive. You see, it's not the level of interest rates that's so important. It's the shape of the yield curve. All right, the dollar. As a result, we've been, as you know, a little bit bearish, not really concerned about the dollar, but this is going to be bullish for the dollar as money flows in to take advantage of the new bull market in stocks. Gold, however, I got to get out of gold now. We've been long now for a couple months, made some decent money. Now it's time to get out of gold. Time to get out of gold. Our indicators, 2 out of 3 are now bearish. 1 out of 3 is bullish. But the most important one is the bottom one, the green line, which is the dollar yen. And it is collapsorama. That's bearish for gold. Oil, I'm getting more and more bullish. I thought maybe we'd pause around this low 50 area. I now actually think we're going to go back up into the 60s now. So look for oil to move higher on the back of ideas that the Fed is not going to raise interest rates and therefore the economy will remain strong. Bitcoin, like I say, we're the only ones short Bitcoin in the whole universe. But I think we really need to now kind of lower our stop loss down to, let's say, about 41.50, something like that. The purple predictor is suggesting that we should start to do the creepy uppy thing here in Bitcoin, but it hasn't happened yet. So the trend is clearly lower. We have to remain short. The fundamentals are still bearish for Bitcoin, but the technicals are starting to show a little bit of strength, a little bit of bottoming action. Nonetheless, I'd prefer to be on the short side than the long side at this point. I know I'm the only person in the universe who's telling you that Bitcoin is a piece of garbage. But okay, hey, be that as it may. What can I say? The reason that I make so much money in the markets is because I don't do what everybody else does. They are losers. All right, enough of that. The new edition is coming out this week. It's all completed. We're getting the emails together, so look for your emails to get a copy of this. This is very, very important. It's the second edition. It's called Financial Crisis 2019. At least twice as long as the first one, with more stuff, more insights, more analysis, more practical things to do. Very, very important that you read it. Look in your email for it. And, of course, we get a lot of our trade ideas from Stock Butler. All right, freebies, thanks so very much. Fully paid up members, I've got even more cool stuff to show you. So hang on.